Listen up, because this is urgent. The AI revolution is exploding right now, and if you don't act fast, you could miss out on what might be the investment opportunity of a lifetime. We're about to reveal 4 AI powerhouse stocks that could potentially double or even triple your investment in the coming year.
I think we're in between this sort of CapEx massive tidal wave and where you've actually seen the numbers come out, where you're going to see the monetization from a software perspective. It's actually incrementally more bullish than even a few months ago when we were in Asia because of enterprise demand. And look, Nvidia is the only game in town now, but the use cases are exploding. That's bullish for hyperscalers. You look at Microsoft, Google, of course, Amazon. And I think it just shows this is about $1 trillion of incremental AI capex over the next 3 to 4 years.
These aren't just any tech stocks. They're the titans reshaping global industry. From a chip maker so in demand, they're selling 15 units for every one they produce, to a cloud computing giant about to monetize AI at an unprecedented scale. These are the must-know stocks for 2024. Ready to potentially skyrocket your portfolio's value? Let's dive in before it's too late, starting with the company at the very heart of the AI revolution. First up is Nvidia Corporation, ticker symbol NVDA. Nvidia has solidified itself as the cornerstone of AI infrastructure, with its GPUs powering the most advanced AI models. The staggering supply-demand imbalance shows for every GPU produced, 15 customers are waiting, reflecting Nvidia's dominance in a market projected for massive AI-related investments. Despite a 140% year-to-date stock surge, analysts believe there's more room for growth thanks to Nvidia's strong fundamentals. Monitoring Nvidia's Relative Strength Index, RSI, can offer insights into whether it's overbought or still has growth potential. A recent 122% year-over-year revenue increase and more than doubled free cash flow highlight Nvidia's strength. Additionally, its 75.98% gross margin showcases efficient operations, while its 88% market share in AI GPUs leaves competitors like AMD and Intel behind. Strategic partnerships with Microsoft and BlackRock further cement its long-term dominance. Keeping an eye on its 50-day and 200-day moving averages confirms Nvidia's bullish momentum, while upcoming Federal Reserve rate cuts could act as a tailwind for AI-driven stocks like Nvidia. The company's future looks bright as AI continues to permeate various industries. But before we move on to our next AI leader, here's a question to consider. If you could choose one sector of the stock market to outperform all others in the next 5 years due to AI advancements, which would it be and why? Share your predictions in the comments below. Now let's shift our focus to our second AI powerhouse. Next up is Microsoft Corporation, ticker symbol MSFT. While many think of Microsoft as the company behind Windows and Office, it's rapidly transforming into an AI juggernaut. Microsoft's price to earnings (PE) ratio is a key metric for comparing its value to competitors and gauging whether it's undervalued or overvalued relative to its AI growth potential. Azure, Microsoft's cloud platform, has become the backbone of AI as a service for enterprises, positioning the company at the forefront of AI infrastructure. What sets Microsoft apart is its strategic AI integration, like Copilot AI, which enhances Azure's stickiness for users. Tracking Microsoft's free cash flow, FCF, shows its ability to reinvest in AI, signaling long-term sustainability. Microsoft's reach is already vast, serving 85% of Fortune 500 companies through Azure, and this share will likely expand as AI adoption grows. With over 60,000 Azure AI customers and increasing AI-driven revenue, Microsoft is poised for substantial growth. Additionally, its $3 billion partnership with BlackRock to boost AI infrastructure makes it crucial to watch Microsoft's debt-to-equity ratio, as lower debt levels indicate sound financial health, especially with scaling AI operations. Lastly, Microsoft's 0.7% dividend yield offers a steady return, while its AI advancements provide future capital appreciation potential. As companies accelerate digital transformation, Microsoft is well positioned to capitalize on the AI revolution. Now, let's turn our attention to our third AI giant, Alphabet Incorporation, ticker symbol Google. Alphabet, Google's parent company, is what some analysts are calling the silent AI giant. Because while it's been a leader in AI and machine learning for years, it's only now that we're seeing the full fruits of this long-term investment. Google's diversification into cloud computing and AI has significantly strengthened its long-term prospects. Google's gross margin sits at 57.4% 40%, which may be lower than Nvidia's, but when combined with its strong presence in the AI cloud, it offers plenty of room for continued expansion. While the company has faced regulatory challenges, particularly concerns over a potential breakup of its search and ad businesses, its AI initiatives provide a strong counterbalance to these headwinds. Tracking Alphabet's forward price to earnings (PE) ratio can help evaluate its growth potential in comparison to its peers. A lower PE ratio relative to its competitors could suggest that Alphabet still has plenty of room to grow, even amid regulatory pressures. Alphabet's Google Cloud division is growing rapidly, especially in AI offerings. Its partnership with Nvidia to offer AI clusters and accelerated computing services demonstrates its commitment to staying at the cutting edge of AI technology. Investors shouldn't overlook Google's potential, even in the face of regulatory concerns. Now let's move on to our final AI giant, Amazon.com Incorporation, ticker symbol AMZN. When we think of Amazon, we often think of e-commerce. But in the world of AI, Amazon's true star is its AWS, Amazon Web Services division. AWS is the world's largest cloud service provider, and it plays a pivotal role in the AI infrastructure market. Amazon's operating margin of 31.5% shows the efficiency of its cloud operations. This profitability is a strong indicator that Amazon is positioning itself for sustained growth in the AI space. In the most recent quarter, AWS even gained market share over Microsoft Azure, a significant shift in the ongoing cloud wars. What sets Amazon apart in the AI race is its in-house silicon strategy. The company has developed its own chips, such as the Graviton and Trainium, which provide cost-effective alternatives to Nvidia GPUs. Monitoring Amazon's volume analysis can also help track spikes in investor activity, which often correlates with major announcements like new product launches or earnings reports. This gives AWS a competitive edge as companies look for ways to reduce the costs of implementing AI solutions. As we look at the table summarizing these AI giants, there are some standout figures to consider. Nvidia, with its impressive 75.98% gross margin, is a clear leader in profitability, while its $2.13 EPS highlights its strong earnings potential. Meanwhile, Microsoft showcases its dominance with a massive $245.12 billion in revenue and an equally impressive $11.80 EPS, making it a reliable performer with consistent growth. Alphabet may have a slightly lower gross margin at 57.40%, but its $307.16 billion in revenue speaks volumes about its ability to maintain strong market positioning even amidst regulatory pressures. Lastly, Amazon, with its staggering $574.78 billion in revenue, remains a behemoth in the cloud and e-commerce sectors, despite a lower 48.04% gross margin. Each of these companies has a unique strength, be it Nvidia's AI dominance, Microsoft's integration across Fortune 500 companies, Alphabet's diversified revenue streams, or Amazon's unmatched cloud infrastructure. These figures aren't just numbers, they're a testament to why these stocks are favored by billionaires and poised to drive the future of AI. As we wrap up, remember that the AI revolution is just beginning. Companies like Nvidia, Microsoft, Alphabet, and Amazon aren't just benefiting from it, they're leading the charge. With massive investments in AI infrastructure and innovation, they're set to dominate the global economy for years to come. However, every investment carries risks. The tech sector is volatile, and regulatory challenges may impact growth. Always do thorough research and consider your financial situation before investing. Before we finish, here's a question for you. If you had to choose between putting your entire portfolio into AI-focused stocks or a diversified index fund for the next decade, which would you pick and why? Share your thoughts in the comments below. In conclusion, AI offers exciting opportunities for investors. Understanding the key players can help you position your portfolio for growth. Remember, investing isn't about chasing trends. It's about building a diversified strategy that fits your long-term goals. Thank you for watching this edition of Simple Investing Secrets. If you found this video informative, please hit the like button and subscribe to our channel for more insights on stocks, market trends, and strategies to grow your wealth. Remember, this video is for informational purposes only and isn't financial advice. Always consult with a qualified financial advisor before making investment decisions. Until next time, keep investing wisely and building your path to financial freedom.